over the last few days, if there's one particular news that has dominated the tech space, it's certainly the talk of SVB and then Signature Banks. So essentially now both these banks have been taken over by a federal regulator. The Federal Deposit Insurance Corporation has taken over the working of these two banks. And this is what President Joe Biden had to say when he made that announcement.
On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place.
That brings us to the question, why did we get here and how did we get here in the first place? So what exactly is this crisis?
We have to go back a couple of years ago when the US Federal Reserve was offering bonds at nearly zero interest rates. A lot of banks made that investment, got a lot of money, like take the case of SVB, which may not be a well-known household name, so to speak, but it is the 16th largest commercial bank in the US with operations, in Germany, Israel, Canada, many places across the world. Now, why? Because SVB was very closely associated with tech startups, and between 2019 to 2022, it saw, because the tech startup, whole tech ecosystem in Silicon Valley and across the world was booming, so did Silicon Valley Bank. Now, what happened is that, a short and simple answer could be, traced back to something which plagues the world all over these days, is inflation. The US Federal Reserve, which was offering those bonds at near zero interest rates, hiked those interest rates. Now, with that, there was a kind of panic. The deposits at the Silicon Valley Bank started to shrink. The bank had to announce that they are going to sell those bonds at very less rate, which created panic among many depositors. They made what in banking terms is called a run for the bank,
right,
and withdrew a lot of money, which is why and how we are here right now.
So in fact, what Abhas is saying, a combination of two factors. To put it in very simple terms, there were depositors who came to the bank to withdraw their money, but obviously a lot of the money was deposited in government bonds, and because of the Fed interest hikes,
Yes.
All of this has now led to this crisis. Now with the federal regulator coming into place, there's also one big concern about Indian startups.
Yes.
What's the kind of exposure that Indian startups have?
Right.
And we also heard the Union IT Minister talking about this, saying
Right.
he will hold a meeting and he will talk to startups in India to find out exactly how exposed they are because of this particular situation.
Right.
And in what sense, because you're saying that a lot of startups banked with SVB,
Yes.
what is the kind of Indian startups that banked with SVB?
Okay, so the thing is that a lot of Indian startups, for multiple reasons, but one big reason is that because they want access to global capital and venture funds, they are not incorporated in India. So even maybe perhaps more than half of the Indian unicorns are not actually incorporated in India, and they had a lot of money or a lot of their deposits with Silicon Valley Bank. Because it was the go-to bank for startups from across the world, Indian startups also went there. Before Joe Biden actually stepped in and made that statement, there was a so-called state of panic. What will happen? There's so much money involved, whether whether they'll get access or not. So the US Federal Reserve and Biden, they came on and said that everybody will have access. So right now there is a state of perhaps not that much panic as it was yesterday, because as I said, Indian startups were directly banking with SVB and it has all but collapsed. So there is fear, but let's hope that nobody ends up losing that much amount of money.
So in that sense, one of the questions that got asked a
Yes.
lot, is this comparable to what happened in 2008?
Not on that scale, because those were like real, and as I said, this is also like the third biggest banking failure in the US history. So it's comparable, but the so-called ramifications, repercussions might not be as much as we saw in 2008 when Lehman Brothers actually collapsed, and which led to a global financial meltdown. This perhaps might not be on that scale.
So where does Signature Bank fit into this?
It is kind of a ripple effect of the Silicon Valley Bank. What happened to the SVB is kind of related to what's happening with Signature Bank. So what happened is that now Signature Bank might not be as big as, say, the SVB, but it still has a lot of deposits, and 80% of its clients come from real estate firms, law firms, even cryptocurrency startups and firms are, banked with Signature Bank. So when SVB kind of collapsed, or the news actually broke out, there was panic amongst the depositors of the Signature Bank. They started calling what's happening, whether the deposits are safe or not. Now, the FDIC actually insures deposits which are less than $250,000. A lot of these customers of Signature Bank had deposits over $250,000. So which led to, because those deposits are not insured, and what was happening with Silicon Valley Bank made a lot of people withdraw their money from Signature Bank, which amongst many reasons led to the collapse of Signature Bank as well.
And now President Biden has said that everything will be done to make sure that the depositors' interests are not harmed. But he said investors may lose money, but that's how capitalism works. So many firms, many startups, not just in the US but also in India, are closely watching the situation, including the government, just to see how much exposure there is and what can be the mitigating circumstances in case any steps need to be taken.